Money in Motion video blog. This is Dan Perkins, and today I want to talk about two things. One, I want to talk about a new acquisition in our portfolio, a company called MannKind. And then the second thing is the news overnight of what happened at the European Central Parliament in a new law that was passed. Excuse me. So let's start with MannKind. MannKind is a stock that will show up on your statements, and you should be getting your confirmations shortly. This is a company, it's a biotech startup company that is in phase 3 clinical trials of a dispersing system using a puffer to disperse insulin in measured doses. No needles, nothing, no bags to carry around, just a puffer. They're in phase 3 clinical trials, and they expect to have those clinical trials finished by the end of August this year, with an anticipated filing for a new drug application with the FDA in late September, early October. Interesting company. I felt reasonably priced considering it has no earnings, has enough capital to carry it at least through the end of the year, and has other sources of capital to continue the funding. The more likely scenario, in my opinion, is if they get a successful phase 3 clinical trial, which we'll know sometime in August. There are partners who will want to come in and deal with distribution of this new delivery system. The implication is not only that it can deliver insulin, but under the proper formulation, perhaps other drugs that are injected can also be delivered through the puffer mechanism. So my scenario in acquiring this is that while I hoped it would be a long-term position, 3 to 5 years, I think the likely scenario is that they get their phase 3 trial completed, and then they go and file for their FDA new drug approval. They get that sometime late this year, early next year, and looking for distribution to sell the product. And then I would expect that somewhere in the neighborhood of 18 to 24 months, somebody, a big pharma, will probably come in and buy the company. Obviously, I'd like to see it stay public, but sometimes some people make an offer that's too good to refuse. So I'm excited about the position. It is some risk, but it's a relatively low entry point in terms of price. I think I'm hopeful that it'll turn out well. We'll know in a couple of months whether we've got a home run or whether we've got a strikeout. But even if so, we're not even anywhere near 5% in anybody's portfolio. So I thought it was an interesting opportunity, and I'll continue to watch it and let you know what's going on. The second, and perhaps more onerous, is the result of a meeting of the European Central Parliament last night when they passed a law that empowers the European Central Bank at their discretion to use deposits in excess of 100,000 euros in banking institutions in 27 different member nations of the European Union for the purposes of helping the banks or the government. I warned about that after they took 60% of the deposits for people over 100,000 euro in Cyprus. And I was concerned that there was no adverse reaction. There weren't tens of thousands of people in the streets. And when there was nothing there, the European Central Bank told us as much, that they may use this again in Spain, Portugal, Italy, and perhaps even France, or wherever they think it's necessary. Now that they have the enabling legislation, that they've put the world on notice. If you have money in a bank in Europe that is more than 100,000 euro, you now are in a position where at any moment, in any given moment in time, the European Central Bank can come in and take some percentage, use Cyprus if you want as an example, 60% of the deposits in excess of $100,000. I think that that's a very onerous sign. I know I've talked to many of you about some of the legislation that's working its way through Congress in the United States, who wants to take and eliminate 401ks and IRA, and they want to capture all of the assets, for example, in your 401k, and give you a credit in your Social Security account for the amount of money that they transfer. It is an easy way for them, the government, to fund the shortfall in Social Security by simply taking the private sector assets in 401ks and IRAs. Now, I know many, many people, when they hear that, say, you're crazy, you're stupid, it's not going to happen. There's a lot of things that have happened in this country that a lot of people would have said a few years ago could never happen. I don't know whether it's possible. I do know that it's being talked about in Congress, and as a result, we have to be careful that we find ourselves in a situation much like Europe now, which has empowered the central government to take deposits in excess of 100,000 euro when they want to in order to stabilize the financial system. I think there is one other thing that is also important. And I know that some of you have contacted me when you saw the reports of the first quarter performance, that you were quite pleased with it. One customer called me and said, I don't understand, with short-term interest rates at practically zero, money market funds at zero, and long-term treasuries at low rates of return, how you continue to get money, the kind of returns and the yields that I need to live on. And apparently that doesn't mean that I'm taking not that much more risk. I think that there is a sentiment today in the market that says there is no way to earn yield, quote, so I must invest in stocks. And some stocks pay dividends, other stocks do not pay dividends. I have said for many, many years in managing money, whenever possible, always get paid when you can while you're waiting for something to happen, dividends or interest. We are able to continue to hold the cash flow levels through this entire decline in interest rates. Actually, last Friday, the yield on the 30-day Treasury was zero. And at one time, earlier in the month, it was actually negative, which is what you're seeing in some of the European countries. Negative returns on cash. Now, what that means is if you give the government $1 at maturity, they're going to give you something less than $1 back. So you're buying a government-guaranteed investment that's guaranteed to lose money. I think these are extraordinary times. I don't believe we have to go all in on common stock in order to achieve the kinds of target returns that we're looking for. So it's harder for me, and I have to work harder to try and find appropriate conservative investments that will give us the cash flow, especially as some are being called away from us, like some of our bank preferreds. The point is, I don't have to take a huge amount of risk to help maintain the cash flow. I have to just dig deeper and find alternative investments that I think are reasonable, that are safe, that are liquid, that'll pay a predictable cash flow. And as one of the reasons why I have been purchasing the master limited partnerships and the REITs is not only do they have a good current income, but they have the potential as earnings go up to make more money. And now we're beginning to see some of those REITs that are some of the master limited partnerships and royalty trusts that we own beginning to increase the cash flow. So a lot going on. I think the most troublesome thing of what's going on in Europe in the banking system, I hope it doesn't come to the United States, but I think that there's a possibility. Remember, any deposit in excess of $100,000 in the United States is not FDIC insured, and you're a general creditor of the bank. So I think that we have to keep our eye on what's going on in Europe and see whether that plays out coming to the United States. I'm excited about MannKind, and I know my job's gotten tougher because of a continuing decline in interest rates, but I'm doing the best I can. As always, should you have questions, please feel free to send me an email or give me a call. And if you have friends or family members who are looking for an alternative investor, please give them my name and phone number. Thanks for watching.